Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, professional trader and analyst, the founder of TradersChoice.net, also a good friend of mine, Greg Mannarino. I just thought it was a perfect time to have Mannarino on because the markets are so crazy. Gold's up, dollar's down, bond market looks like it's edgy. Gregory Mannarino, let's start with this chart you sent me, and great minds think alike on the weekly news wrap-up. I'm not even a trader. I'm not an analyst like you. And this is the chart you sent me, and this is the ETF. And that is just a sled ride down to Hades. I mean, this is since January right here. You sent it to me when this is ugly. Let's talk about this chart right here. What is going on? This is a move that happens, in a very rarely in 8.5 months.
Greg, I have been really, and I mean this, and you can ask anybody pretty much who follows my work and your work too, screaming from rooftops ever since this started with the US dollar. It topped out just about the end of December, and it has gone almost virtually straight down. Of course, we've had little bumps up and down, but look at that trajectory. It is going down. I've been warning people. I've been telling them there's no end in sight here. And there isn't. There is no end in sight with regard to the dollar. And people need, honestly, to start seeking alternatives. My favorites are the precious metals. You know that, more specifically silver. People need to become their own central bank, bet against this debt. The dollar is nothing more than a unit of debt. It is an unbacked liability being dispersed by a bankrupt government under the control of private banks. The Federal Reserve is run by private banks. We all know that. And they are determined to kill the dollar. Have a look at this. That's Janet Yellen killing the dollar. That's my personal rendition of Janet Yellen killing the dollar.
Stabbing it. I got it.
I think it looks a lot like her. I mean, look at that face. I work this morning here. But seriously, what we need to understand here, it's
wait. So Yellen, and I hate to, I'm going to come back to you in just a minute.
Sure.
So Yellen, she did a 180. You pointed this out about how she did a 180 not long ago and just went, oh my, you called me on the phone. Did you just hear what she said? She's not going to raise rates. I was like, really? She, yeah. Oh, yeah, she did 180. Well, so you're saying that the Fed knows they have a Sophie's choice. Let's see. We can make the stock market go up, or we can keep the dollar strong and destroy the stock and the bond market by raising rates. I mean, is that right? If they raise rates, they kill the market. If they don't raise rates, they kill the dollar. I mean, this is what we're down to.
It's outrageous, and you're right. I'm glad you brought that up. When Janet Yellen, I remember when it was, maybe a month or so ago, and she stopped. If you recall, if anyone was paying attention to what's going on here, Janet Yellen was, like pounding the table, talking about how the Federal Reserve is ready to raise rates, not only raise rates, but start normalizing their abnormal balance sheet. And then she does this 180. It's incredible. I called you that day, and you remember what I said? I said the market was going to go higher, 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 and that's exactly what it has done since that point. It's incredible. And now we're hearing more of the same thing. More Fed people are coming out. Brainerd recently, they're talking about pushing off rate hikes. They're not even addressing the balance sheet anymore. They're going to continue to inflate the balance sheet with no end in sight here. That's also putting pressure on the dollar. And they know exactly what they're doing here.
So hold on.
In my opinion.
Go ahead. Give me your opinion. I want to ask you a question. Go ahead.
My opinion is they're going to suck as much purchasing power as they possibly can out of the dollar. The Federal Reserve believes, and I want people to ponder this for just a minute here, that by making things more expensive, by sucking the value out of the dollar, you're going to be better off. That's what they believe. So, I mean, right there, you can see it's some kind of twisted mentality going on here. And they know people don't pay attention to it. The general public out there, they are zombified. They can't walk and chew gum at the same time. I'm going to tell you straight. I think you know that. I know my followers know that. I say it all the time. I'm on my channel. But that's a fact here. They know nobody.
So they don't know what's getting ready to hit them. Is why you're saying that they're zombies.
They have no idea. Now, with the Federal Reserve, is determined to do, again, is to kill the dollar. We might get a bounce here or there, but that downward trajectory that's in that chart that started at the end of December there, that I've been talking about since that time, is going to continue, has no end in sight. We know this because the Federal Reserve, Dudley came out maybe about a month or so ago. He said that the Fed was going to do whatever it takes to create inflation. So that means they're going to print, they're going to add digits to a digital screen. But what they're not telling people, they can't. The reason why the Fed cannot hit their inflation targets, the reason why the Fed won't ever be able to, is because our economy is dead in the water. The cash is not moving. So they can print, they can add digits to a screen from here into oblivion. It's if the cash isn't moving, okay? That's why we're not seeing massive inflation yet, because as I have said on your show, there is going to be a moment when all of these extra bills start chasing the same amount of goods. And what's going to prompt that happening, going back to what you had mentioned a few minutes ago, is the bond market action. Right now, cash is moving, Greg, as you know, back into the perceived safety of debt. You got to be nuts here, but the U.S. 10-year yield is plunging. The long end of the curve and the short end of the curve, there's almost no difference here in yield, so the yield curve is flattening out. So the cash is seeking safety as the dollar is falling now. I want people to keep this in mind because it sounds kind of crazy, but it's true. This environment is actually stock market positive for now. We've seen what's going on here. Nothing major seems to be affecting the market. It's Teflon. North Korea issues, hurricanes notwithstanding, it doesn't seem to matter to the market because there's the situation that's being created here by the Fed on purpose, by melting the dollar, by artificially suppressing these bond yields. There's nowhere else to go. The smart money is becoming their own central bank, getting away from the dollar, getting into gold, getting into silver. As you know, gold just hit a high for the year. Now, that is also a trajectory that's going to continue.
Here, I'll put it on the screen for you here. Hold on.
Yeah.
There you go.
Yeah,
I use this on my weekly news wrap up, and just oddly enough, here we have, this is what I use. We have this is the Dixie, this is the dollar. So at 103, boom, crashing, and then this is the opposite of that trade, which is the gold going up. It's up and down, but the line is going up. And you're saying this trend's going to continue because why? Why are people, and mostly rich people, flocking to gold instead of just flocking into the bond market?
Well, let's put another perspective on that. Why is the dollar doing what it's doing? Partially because investors, they don't want anything to do with it anymore. They're dumping their dollars here. And that is also going to play into this movement of these extra dollars that's going to occur at one point when we get a massive sell-off in the bond market, which is coming. Don't listen to Greg Mannarino anymore. Start listening to Alan Greenspan, who said that that's in a bubble, okay? I think Alan Greenspan watches my channel. He must watch your channel too, because he sounds a lot like you and me, Greg, honestly. But that's really the truth here. So the debt market is where all the action really, we all need to focus on that. And I've been stressing that point for years. I've been saying, watch the bond market, watch the debt market, forget about what the stock market is doing. All the action is going to start there first. We're starting to see some very interesting things occur. Again, the dollar in this downward trajectory with no end in sight. There's nothing that's going to put a bottom here on the dollar. The Fed is determined to kill it. They've made it as plain can be that they will do whatever it takes to create inflation. Now, they're not going to be able to create inflation at this point because our economy is dead. I don't care what's coming out of Trump's mouth. I don't care what's coming out of any of the other politicians' mouth. Without money velocity moving higher, we are near historic lows. They're not going to create inflation. I don't care if they start the printing press on hyperdrive and add some nitrous oxide to it. It's just not going to work. So, again, there's the main issue. And the sell-off in the bond market is going to happen. There's going to be a point here where
what's going to spark
investors, and they don't want to hold this debt. Alan Greenspan said it's in a massive bubble, and he said the market is not recognizing it. He also said, just like I've been saying, that the potential here for a rapid sell-off in the bond market is very, very high. And when that happens, that's when cash is going to start to move. And when cash starts to move, all of those extra bills, Greg, that are all over, digital and or otherwise, are going to go chasing the same amount of goods. The Fed is going to massively overshoot whatever target they want to hit with regard to inflation, and they can't stop it at that point. It's like a leak that is unstoppable. It's like the Titanic going down. Once this occurs, once we start seeing that sell-off there, right now cash is moving into the debt market. It's still doing that. It's coming out of the dollar. But this has the potential to change dramatically. Again, debt's in a bubble. When that sells off, rates will spike rapidly. That will put pressure on stocks, and all of these extra cash, bills, whatever you want to talk about, that's existing in the bond market and the stock market is going to come out and seek alternatives. And I specifically say it's going to go into suppressed assets, more specifically gold, more specifically silver. So you can see it's a very simple, like it's adding 2 plus 2. This is how it's going to play out eventually. But for now, we're watching distortions in this market just get worse. We're watching bubbles inflate to the upside. We're watching inverse bubbles occur. We're seeing, again, the dollar sell off, cash going into the perceived safety of debt. You've got to be nuts. Every time I say that, it freaks me out. The Fed is stuck. They can't normalize their abnormal. This is their word. Okay, by them saying normalize their balance sheet, that means that their balance sheet is abnormal. Okay, it's larger than the GDP of most countries. It's incredible. The debt can never be paid back. We all understand that. It can't be fixed. The system is debt based. Period. And the world central banks are never going to give up the power that they have been given here. Again, their product is debt. That's all they have. It's their one and only product. So that's why we have this debt-based economic model. We're never, unfortunately, I don't think there's a way to get us back into a wealth-based system until this one completely just goes up in smoke, which is going to happen. And I think at that point, we should take people like Janet Yellen here and go after her with pitchforks, because they're the ones that have created the apocalypse, the financial apocalypse that we are marching right towards.
When you say they have to expand their balance sheet, they have to buy everything. What does that mean? They have to buy everything. So they're going to have to start buying bonds that people, that countries and sovereign groups and hedge funds say, I'm going to cash out of this. Listen, I'm out. You're going to pay me back in confetti. I mean, if you keep with expanding the debt ceiling, now they want to do away with the debt ceiling. They just got a 3-month deal. So at some point, do the big players say, "Oh, I'm done"? 1.8%. When do they say they're done this time? They do away with the debt ceiling. They're at 1.5 or 6% on the 10-year. When do big investors go, "Okay, we're done. You're going to pay me back in confetti"?
When that moment happens, I don't know. I don't even try to predict it anymore. It is going to happen. This is all going to correct to fair value. And I think that's what people need to understand is when they're looking at the stock market, when they're looking at their house, when they're looking at the value of the purchasing power of their fiat currency, when they're looking at any asset whatsoever, there's no real price discovery mechanism behind it at all. The price is not real. It's going to correct to fair value. The market only has one job. It's so simple. One job and one job only. And that is to determine fair value. That has been stolen away from the debt market, number one, which has bled off to everything else. Everything prices off of what happens here in the debt market. People don't understand that. They have no conception of it. People think that everything prices off what's happening in the stock market. Or it's not true. We're in some kind of a twisted, multiple expansion environment with regard to the stock market, only because of suppressed debt, of what the Fed has been doing to interest rates now. Quantitative easing never stopped. We all know this. And how do we know that? Because in order for the Fed to keep interest rates where they are, they have to get into the market and make it happen. They can't just say, oh, we're going to keep interest rates low, everybody. The Fed has to take cash, print it out of thin air, add to a digital screen, and buy the debt. That's what they've been doing. So in order to keep interest rates where they are, the Fed is in the market every single day, buying debt, buying debt, buying debt. This is what they're expanding their balance sheet. They have to buy the debt because nobody else is going to buy it. Explain that. Well, that's a number. That's also the Fed is the largest buyer of debt. Period. People don't even understand that either. There's no doubt about it. Who in their right mind will want to hold a 30-year bond that's going to pay 2.5%? What are you smoking or shooting or snorting? I don't know. It must be something kind of funny, because I wouldn't want anything to do with it whatsoever. It's incredible that people think that this is something that's real, that the price is real.
But hold on just a minute. Where's all this big money going to go? I mean, you got Martin Armstrong brought this up one time, and I thought, it's like Helen Keller and the water thing, water, put in your hand. But he said that if you got a couple of $1 billion, you got $200,000, sure, you can get a $250,000 FDIC insurance. But if you got $2 billion or $10 billion or $100 billion, whatever, you can't. You got to put it in the bond market. You got to put it in the Treasury market. That's with the full faith and credit. That's why people are running into it. These big money players don't know what to do with the money. Isn't that right? Don't they feel like, what am I going to do with the money? I mean, they're trying to hold on to their paper profits, aren't they?
Well, the big money right now is going into the stock market, because that's why we have this bubble here in the stock market, which is inflated on the back of a dead bubble. There's nowhere else to go. This is the environment. You want to hold the dollar? Good. Hoard some dollars and watch your purchasing power and your wealth just get flushed down the toilet. You want to hold a unit of debt here in this environment where people like Alan Greenspan, not just Greg Mannarino, is saying it's in a bubble here. The stock market's in a bubble too, but it is highly, 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 highly liquid. So you got all this big money here. Again, pushing stocks to record high after record high after record high. And it's going to continue until it doesn't. And everyone else, all of the non-big players out there, like the average Joe, is going to get killed. Killed. You see Janet Yellen stabbing the dollar? That's going to be Janet Yellen stabbing you. There's no doubt about it. This is how it's going to play out. So the Fed is again created an environment where there's literally nowhere else to go but into risk assets here. The smart money, again, we know where that's going. Look at gold. What's it doing this year? It's at a high for the year against the dollar, which is going to continue lower.
Do they want the dollar to go down? They must know it's going to go down. They must want it to go down. They want the inflation, right? They want the inflation. They know if they don't raise interest rates, the easiest way to protect the currency is to raise rates. They're not going to do that. If they raise rates, as we've been saying, well, they'll crash the economy. And if the bond market goes, if we get a sell on the bond market, doesn't the stock market tank too? Can you have a good bond market and a dying, plunging bond market and a vaulting higher stock market? Can that happen? I mean, if one goes, doesn't the other one go too?
All right, let me say this. In the scenario that is going to unfold, again, the price of debt is not real. It's artificially suppressed. So
because the Fed is buying
if and when.
Because the Fed, I don't mean to interrupt. I'm just trying to figure this out for me. And this is why you say they're going to keep expanding their balance sheet, because the Fed is overtly and or covertly buying this debt with the Exchange Stabilization Fund or the Fed or Belgium or whoever. Somebody's buying the debt.
They have to.
They have to.
That's
how
the Fed adjusts interest rates.
Otherwise, if they have to put that money out there for bids, people may not buy it till it hits the 10-year hits 4% or 5% or 6%. So they're scared to death of just putting it out to get actually truly bidded on. So they're buying it to suppress the rates. That's what you're saying, right?
Absolutely. That's what they've been doing now for the better part of a decade. Now, again, it's a very, very simple scenario. Take the situation that we're in now and reverse it, and you can see how that's going to play out. If interest rates were allowed to reach a fair value dictated by the market, who knows where they would be, but I can tell you this, housing would be nowhere it is right now. If interest rates were normal, anywhere near normal, housing would come down big time. The stock market would come down big time, and the dollar would come up. But they can't do. Look, they're in a really bad situation. I don't know how long they can keep this up here, but there's going to be a moment of correction. Period. This stock market is doing something right now. Talking about the stock market that it hasn't done. And I can't even remember the last time. We have not had a 5% correction in this market. Not even just a 5% correction in over a year. Usually we have 3 or 4, 5% or more corrections in 1 year.
What do you make of that? Are they afraid if it starts correcting that it'll snowball and before you know it, we'll be down 50%? Is that what they're afraid of? Why they will not let it correct? Are they afraid of a correction turning into a bloodbath?
No. They're not afraid. What they're afraid of is the bond market. Whatever the Fed is manipulating the stock market by playing with the bond market. Okay, this is what they do. Again, the debt market is the biggest market out there. If they can artificially suppress interest rates, the market will continue higher until it does not. So the Fed has got the back of the market, period. How do we know this? Because they won't even utter a word now with regard to normalizing their abnormal balance sheet. If the market believed that the Fed, not just the stock market, but the dollar, if people that trade currencies believed that the Fed was going to raise rates, does anyone out here who's listening to my voice believe that the dollar would be going down like it is? No. The market is calling the Fed's bluff across the board. The currency markets are calling the Fed's bluff. The stock market is calling the Fed's bluff. Forget about it. The Fed is done. Greg, you know this better than anybody because I told you the day that the Fed came out, Janet Yellen, we were on the phone. I said they're not going to do anything to their balance sheet. When Janet Yellen said, oh, we're going to start normalizing, I came out on my channel. I said it ain't happening. They're not doing it. They can't do it. And I'll tell you something, they're going to keep inflating their balance sheet because they have no alternative. This is probably the end stage of this thing that has been put in play decades ago here.
What does it look like at the end, though? I mean, would they just say, we're closing the bank and we have a new SDR currency, or the dollar's been devalued, or we're reorganizing the debt? I mean, what does the end game look like? I mean, the zombified public thinks that they're just going to keep going and they're going to have a little holiday and everybody's going to be made whole, and that's not true, right? I mean, what is this going to look like when it goes? What do you think it will look like when they decide to reset it or crash it?
It's going to be a resource problem, Greg. This whole thing comes down to resources. This is why things are the way they are. It's a debt-based model. People don't even understand what that means. They hear when I say it's a debt-based model that goes in this year and it comes out the other side. But what they need to understand is the system demands that debt, current system demands that debt be borrowed into existence in greater and greater amounts every single minute of every single day. It cannot ever stop. Once we admit the credit card is maxed out and we cannot borrow anymore, that's it. The system comes to a halt. Credit freezes. There's nothing left on the shelves of the stores. You don't get paid. Government shut down. There's pandemonium in the streets. This has happened before. It's going to happen again, but never on this scale. That's what is going to happen at one point. So forget about having a job. We're talking about Great Depression times multiple factors worse than it was back in 1929, and all of this could have been avoided. It never had to happen. The 2008 event was really the moment where the market was trying to find fair value. That's all it was trying to do. It wasn't even a real crash. It was the market trying to find fair value. The Fed said, no, we're not going to let this happen. We're going to get in there. We're going to start buying everything.
And then you have Kramer screaming because he and his buddies are going to take a big loss. You know nothing. What we should have known was that we were padding the rich. Warren Buffett, that idiot, that incompetent idiot. He loaned money to GE. They needed a backstop. He loaned money to Goldman Sachs. AIG would have taken him under. Many of the companies in the Berkshire Hathaway funds needed TARP or a bailout or a backstop or something. And he's talking about his stupid secretary. She pays higher taxes than I do. Yeah, but your secretary doesn't get multi-trillion-dollar bailouts. I mean, that's what we're talking about, right? We're talking about this thing's not. We're not going to get a bailout next time. We're going to find the real value.
They can't do it. Can't be a bailout next time because that's the whole problem. The whole issue is they didn't allow the market to correct the fair value. What are they going to do? The whole thing is dependent on debt, like we were talking about before. Once that foundation just gives way and we can't borrow anymore, well, what's the Fed going to do? They're dead. They're stuck. They can't fix it. It can't be done.
But what does that mean? Does everybody's bank accounts get confiscated? Is everybody's pension ruled null and void? Is Social Security in the tank? I mean, is that what does it look like when when the money's no good? That's what you're talking about, right?
It's Armageddon. You can't get your cash out of the institutions. The ATMs don't work. This is it. It will be party freaking over.
So $100 bill is like a dollar bill.
What's that?
So $100 bill would be like a dollar bill?
if you can get one of your $100 bills, if you can get some cash at that point, I think, look, it's kind of a double-edged sword here. At the same, there is a potential here, and I don't really want to talk. I don't think we should talk too much about it. But let me just say this.
Oh yeah, we should. Come on.
Okay.
Come on.
I don't know if you know where I'm going. Maybe you do.
Well, come on.
There's a potential that we end up. This is going to sound bizarre, and I want people to sit down for this one. Okay. I don't talk too much about this. In fact, this might be one of the first times I'm ever talking about this on a platform like this. We may end up being in a situation where we're actually cash short. What I mean by that is actual bills, actual printed bills. Most bills exist in digital form. Go to the Federal Reserve's own website right now when you finish watching this video. There was 1.4 trillion of actual printed dollars in existence. The rest of it exists on a digital screen. It's not real. Okay. We may at one point end up into a situation where unless you have a printed bill, which does not exist in your bank account, it's not there. Okay, whatever you think is in there, it's not in there. 10% of that cash is lying. If you have $100,000 in your bank account, there's 10,000 that's available. That's it. The rest exists in digital fantasy land. Even that 10,000 is probably digital that you won't be able to get. So there may be a point where people actually do. Okay, I know this sounds contrary to a lot of things I've been saying, but if I want people to think about it, if we may end up into a situation again where there aren't too many of these actual printed bills, and who knows if people will even accept them at that particular point here. But most of the dollars or cash by exponents that's out there exists on a digital screen. So there may be a point here by having some dollars laying around here that you could possibly use these in a worst case scenario. Look, people need to understand one of the most basic premises that goes back thousands of years here. You always have to be prepared for a worst case scenario. You always have to have the high ground here. Does it sound like anybody? This is Sun Tzu, The Art of War. So this is why it's important to think of things in the perspective that, wow, this can get this bad. Because if it doesn't, well, you know what? You're ahead of the curve. But if it gets that bad and you're not ready, well, you're done. You have a zero chance of survival in a worst case scenario. So in these concepts, they're very deep. But the main issue, what we need to understand when you ask me, where is this all going to go? It's, look at a movie like Mad Max. I mean, these are worst case scenarios when the debt markets freeze up, the cash is not available, digital. Will people accept printed bills? I don't know if they will. What
Probably
will they be worth
for a short
at that particular time? Maybe a $100 bill will buy $1's worth of something. I don't know, but it's kind of interesting that in my opinion, we are going to just simply fall back on real money, which has been around for thousands and thousands of years, despite what people like Ben Bernanke might say, have proven to be holders of wealth throughout the millennium, and that is gold and silver, period. So this is what people need to be. Again, in all of that, and no matter how much food you might hoard or ammunition, it still may not help you in a worst case scenario. Because we have a population bubble, there's no doubt about it, that's been fostered by a debt-based system that has created an artificial environment where if we did not have a debt-based system, our world population would probably be about half of what it is. So you can understand, if the debt-based system, and when the debt-based system ends, we are going to see a loss of human life on a biblical scale. And this is all, again, because of Janet Yellen and her other cohorts who have done nothing but force their product, which is debt, on the people of the world, forced us to accept this as real money, forced us to accept a system that demands that we continually borrow from the future to support where we are. Not just that, in order to support where we are, we have to borrow in greater and greater and greater amounts every single day. It cannot ever stop. But it will at one point.
And I want to just get your quick take on, I brought this up in my weekly news wrap, just your quick take. I just thought it was freaky that Donald Trump just jumped on a 3-month debt deal and then wants to eliminate the debt ceiling, which I guess gives you the idea that we're trying to keep it down, but every time we bump up against it, boom, we raise it another couple of $1 trillion. So why do you think Trump took this deal? What is he seeing coming in the background that he took the, or do you not think anything of it? You think he just, bypassed McConnell and Ryan? Your thoughts on why he took this short-term debt deal?
Well, because he understands as clear as I do, and I would imagine as clear as everybody else who is listening to this right now understands, that the debt-based economic model must go on, or we end up in the Stone Age. So, it's funny. I was on my channel talking about all this, and I was getting emails. Oh, they're not going to raise the debt ceiling. I said, you're all 100% wrong. Not only are they going to raise the debt ceiling, but they're probably going to get rid of it. This is what they've been talking about.
Ha! You're right. Time. That's what they're talking about. Yeah, you're right.
He has to. They have to do it. Again, it's the nature of the beast. Until we adopt a wealth-based system, our country will remain in debt beyond belief. Its citizens will remain in debt beyond belief. This is the way it works. If we had a wealth-based system, we would not be in the situation where we are. Individual citizens would not be in the situation that they're in. It's world central banks here that is, beyond any doubt, public enemy number one, and I mean number one, because they are going to be responsible for what's coming down the pike here at one point. Don't know when, don't speculate, don't care. All I want to do is capitalize on it right now while I am able. Period. And I think that's what people need to focus on here. And remember what I said earlier. Take the high ground. Just be ready for whatever might come. Because if you're not ready, you got zero chance.
These hurricanes. Harvey, one Texas congressman, and I think he's probably pretty close. He says, all told, just the federal help is going to be $100 billion. There was $150 billion losses in livestock and in farm products in Texas only. And then all the refineries and the loss of employment and loss of taxes, blah, blah, blah. He says it's $1 trillion. Well, if the Texas Harvey was $1 trillion, Irma's another trillion. Is that just an unbelievable 1-2 punch? You talk about having to expand the debt. All of a sudden we're going to need a cool $2 trillion to get us back to where we were before the hurricanes. Well, does that accelerate the Mad Max scenario?
Where does everyone think that cash is coming from? Of course, it's coming from the banks. The banks finance everything. They finance. Look, let me tell you something. They're probably loving what's going on right now. What they're not loving right now is the interest rate suppression that's going on here too. Banks are going to pay for that. Again, it's all playing together here. The banks are having a difficult time functioning in this environment, but yet it needs that environment to just keep rolling forward. So we got to be darn close to an end here. I don't know what the Black Swan event is going to be. Could it be one hurricane or another or some other thing? Absolutely. There's going to be a moment when this does correct to fair value here. I don't want people to think about it as a collapse. I want to think about it as a normalization of everything just finding its real value. And unfortunately, the toll here is not just, it's going to be paid in blood. It's going to be paid with human suffering on a biblical scale. When this ends, the world reserve currency, the U.S. dollar, is a dying asset.
Well, the U.S. Federal Reserve note is a dying asset. The U.S. Federal Reserve. Exactly. Maybe it wouldn't be so bad if we said, hey, you made a bad investment. We're not paying you. We're sorry. We're not paying you that debt. We're going to default.
You know what makes me?
Wouldn't that be so bad for us to default? Who's the guy in the White House who's done it before in a big scale on a personal level? Donald Trump. We're never going to move forward unless we do something with this debt that we're never paying off.
If we default on the debt, the credit markets freeze, pandemonium in the streets, civil war, death on a grand scale. We cannot default on the debt. It's going to unfold one way or the other. First of all, the Federal Reserve,
we will default.
If it weren't for their...
I'm not arguing with you, but we will default if we print crap loads of money. And I'm Mr. Lee in China, and I'm Mr. Lee, and I say, wow, you're just going to print more money and pay me in confetti?
You're going to kill the currency.
Then I'm out of your bonds. Give me my money. I'm out. Yeah. Right? Mm-hmm. Isn't that going to happen? Either way.
It's going to happen one way or the other.
Or Mr. Singh in India
that we can't even think about. There's going to be a point where this does correct the fair value. It's very difficult to speculate where this is going to be. I think the debt market is where it's all going to happen. We might be seeing some of it now with regard to the yield curve flattening out, with regard to the dollar bleeding off like this. The flattening out yield curve, the cash that's now moving in to the bond market has a very high potential. Don't listen to Greg Mannarino, listen to Alan Greenspan, to sell off rapidly. Could this in a bubble?
And that's what I'm talking about.
If that happens, I mean, pandemonium, Greg.
I mean, these people that are foreign. I mean, what John Williams says, 16 trillion outside the country. At some point, I mean, some guy over in India, and not to be xenophobic, they're lovely people, but some person over in China. I mean, everybody can do math. It's universal, and they're going to say, whoa, you're going to have to add another couple of trillion with these hurricanes, and then there's Jose, and who knows what else has to happen. But you're going to add another couple of $2 trillion to everything else that you're trying to do, and you're going to give everybody a tax cut? I'm out. Give me my money. I mean, isn't that going to be what's going to happen?
What I want people to think about, because of what you just said, and it's very interesting. When the Federal Reserve, clicks adds digital bills to a screen, or prints them out of thin air, or has to print trillions out of thin air to help these people with rebuild here, where does that bill get its value from? It's every bill that is brought into existence or borrowed from the future into existence has to steal a fraction of its value from an existing bill, in whether it's a digital form or a printed form. That's how the other bills that are miraculously, created out of thin air get value. So the more that they do this, the more that the value of the dollars that are existing will drop. That's what we're seeing now to a large degree. So going back to what you're saying here, without any doubt, and it's not just the bond market that's going to suffer, Greg. It is the dollar itself. Investors are going to dump dollars. They're doing it now. Otherwise, you wouldn't be seeing the dollar do what it's doing too. And they're going to look for other assets. Let me just say this here. I know a lot of people don't believe in this, and it's very hard to get your head around. But why do people believe? Why do they just open up your mind a minute? Things like Bitcoin is doing what it's doing. When Bitcoin hit $1,800, I told everyone start hoarding it. It went back up. It dropped to 2,800. I told everyone it was going to 5,000 in a very short period of time. It's on my channel. I wrote articles about it. We're almost at 5,000 already, and we're in no way a bubble. Not just with Bitcoin, but these other cryptos, because right now people are seeking avenues. And don't think of it as a cryptocurrency. That is what's playing on people's minds. Think of these as assets that people right now believe in. They believed in tulips at one point, and those that got in on the right side of that made a lot of cash here. But these are simply dollar alternatives, just like gold and silver. These are my favorites beyond anything else.
Gold and silver are your favorites.
My favorite asset is silver. You know that.
That's right.
And that's what people need to hoard.
Silver's still very cheap, though. I mean, relatively speaking, it's what, $18?
Greg, you know it's ridiculously cheap. And you got to keep buying this and hoarding it, betting against the debt, becoming your own central bank. And that means getting away from the dollar that is getting killed right now for all the reasons that you and I had spoke about. It's only going to get worse here, and it's going to be very interesting to see how this plays out moving forward. Until it doesn't, I just want people to understand the situation that we're in is it not sustainable. And there's going to be a moment when, don't know, don't care, when it corrects to fair value. Just be ready for it and capitalize on it while it's happening now.
Let's talk about you just real quick. You're not on YouTube anymore. You ended up getting paid, I don't know, $1. You get 20,000, 30,000 views, you got $1 or something like that. Where are you posting your videos? TradersChoice.net, is that where you are now? That's where people can come see your work. You're still posting videos and things like that. TradersChoice.net.
Greg, it's amazing. We didn't even talk about this before the interview, but I got thousands of emails from people practically begging me to come back to YouTube because they couldn't watch me on the other platform. I have been getting killed by YouTube, and it's not just about money. Daily Motion pays twice as much as what YouTube does. That's a fact. So ask anyone who's got. If you want to make some money, and you can handle it, it's a difficult. If you're a new person, go to Daily Motion, honestly. But YouTube, it's not just the monetary things that they've been doing to me. They review my videos. They they send me these emails. Your video is inappropriate for this group or for that group, and it drives me insane. Then I got to write a thing. You know what it's like, argue with them and tell them why. Well, review my video, and then you tell me why it's inappropriate, and then finally they'll allow me to put it up. So this is what I've been dealing with, and I've been telling everyone for months. So I said I'm getting out of YouTube. So what happened over the past week or so? Thousands of emails. People like practically. Got really upset about it. They couldn't watch my videos. So I started posting on YouTube again. I don't know how long I'm going to be there. I'm going to do that. If I can, honestly, look, I'm trying to deal with these people with YouTube, and they are like the Gestapo. It's unbelievable. So I'll deal with it for now. I will post over there until I can't anymore. But I've had it up to here. I despise, and I can't stress this enough, the YouTube platform. If I can ever find a platform that'll work as well with people who will be happy, because literally, Greg, thousands of people were unhappy. They wrote to me, Greg, please come back. We miss you, blah, blah. I can't watch your videos over there. So I had to go back. So I'm going to start posting over there until I can't, or until I find another platform that works, because I want out of YouTube. I cannot stand it anymore. I don't want to support the platform. But until something comes along that's better, I feel an obligation to post things, so I'm going to keep putting them up.
Gregory Mannarino, always go to his website first, no matter what. Go to Gregory Mannarino's website, traderschoice.net, all one word, traderschoice.net. Gregory Mannarino, thanks for the long, in-depth conversation about the bond market, gold market, the debt, the correction of par value. I know you've said that a lot in the past, but I think that's just what it is. It's what's going to happen. Gregory Mannarino, traderschoice.net. All the links will be there after the interview section. For you folks on YouTube, just click back to the site, and you'll find his traderschoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com.
Excellent, Greg. Thank you. Take care.